Thursday. What's up, everybody? Thursday morning. Hope you guys are having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, as we're going to take a look at our major markets from an educational perspective, looking for breakouts, reversals, all that fun stuff. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts, the updates, all that fun stuff. And we are looking at inflation numbers today. Today is going to be the day where they release the inflation numbers. We're looking at a projected rise of 7.3%. That'll be a little higher than 7% that we got last year. But what do you think the markets are going to do today? Leave a comment below. What do you think the markets are going to do with the inflationary numbers? Do you think we're going to get a big move? Do you think maybe it's been priced in? Do you think maybe yesterday's move up absorbed some of what we're going to get today? Who knows? But let's look at the markets and see what the chart tells us. Let's go ahead and dive right in. All right. Starting with the S&P, we are down about 5 points this morning, as we did get a pretty strong rally yesterday. Came into this little 15-minute supply area, which that 15-minute supply area is a bit of a wick over wick zone. If I zoom in on it, you can see the very clear wick over wick below a pivot high. We did come into that level, and we got a little move away, but 1, 2, 3, 4, 5, 6 candles later, it had kind of started to go your way. 7, 8, 9, 10, 11, 12 candles later, you knew it had gone nowhere. By the 13, 14, 15th candle, we popped above the zone. And so, based on our 6-candle rule, it told us you should probably get out of this thing. It ain't really going the way you think it's going to go. And it really was, in a confirmed uptrend, it didn't really give us a great entry anyhow. And so looking at this on a 4-hour chart, we are still technically in a bit of a confirmed uptrend. We're sitting below a potential breakout level right here, as that's an area that we've hit in the past. And so sitting below that breakout area, I think right now that's really what you're looking for, is a breakout above 45.87. We're sitting right now at 45.72, so that's still 15 points away. So by the time we would get that breakout, we'd be up 10 points on the day. But I think there's room to run until 46.16 or so. You look around 46.15 as a first target. I think you may get a pretty good breakout on the ES above that level. So keep an eye on that one for today. In the NASDAQ yesterday, we did talk about this breakout trade. And so this breakout trade did work, was very effective. And if you missed the breakout, you were given an opportunity to take the retest. And the retest was on this area right in here on a 15-minute chart. Price came back into there for a retest with a very strong move away. So now that is DTM, dead to me. Got to get rid of those areas. And you've got to say, well, what do we look like for today? Well, on the 4-hour chart, clearly we are not as strong on the NASDAQ as we are as the S&P. The S&P is sitting right below this pivot, ready for a breakout of this pivot, whereas the NASDAQ is well below that pivot, right? Going back to the 4-hour on the S&P, you can see that. Here's the pivot right here. The S&P is sitting just below that pivot, which is this area to the left, whereas in the NASDAQ, that pivot exists here. Here's the area to the left, but we are still well below that pivot. So the NASDAQ actually a little bit relative weakness compared to the S&P in general. And still has a little bit of a supply area up above us in the form of this pivot off this speed candle. Now, this speed candle, we do know that speed candles tend to get retraced, and we are coming close to this area. However, it needs to be a confirmation entry because I do think that it's still valid for probably a good 1-to-1 or a 2-to-1 reward to risk at the very least. But I don't know that I would make that trade around the around the inflation numbers as they come out this morning. Sometimes you're going to see big moves happen that are very reactionary in nature on a number like that. And if we're up there, when the numbers release, we may see a quick move down. So keep an eye on that for this morning. Looking at the Russell yesterday, the rut, we do have, and I pointed this out yesterday, for the first time in a long time, a higher swing high and a higher swing low in the Russell on the daily chart. So that means that I would be very interested in getting long on a quality pullback inside of the Russell. And so if I look at the most recent hourly chart of the Russell, we are doing a little bit of a triangle pattern up here. It's not a great one, but it is a little bit of a triangle pattern of a bull flag. And so I think you could see a breakout of this pattern for price to trade a bit higher. And then last but certainly not least is the Dow Jones. We talked about a potential breakout in the Dow, but only really up to this level, and that's exactly what we got, was a breakout of here right up to this area of supply, and then we sold off of that supply area. So now I'm going to remove this one and this one and this one. All of those levels were very effective yesterday for day trades only. There was not a lot of opportunity there aside from a day trade, but now we are sitting below, I think, what could be a pretty good breakout setup in the Dow Jones right above 35,756 for price to continue to trade higher than this region here. All right. So those are our equity markets for today. Let's take a real quick look at our energies and metals markets, starting with crude oil. And crude oil, remember, we're coming off that 90, that weekly supply area in that $90 range. And you have to go back on a much larger chart to see it. But we're coming off of this weekly supply area over here to the left. Now, this weekly supply area, which we see over here to the left, is a very useful level. However, one of the things that I said was I need to see a weekly candlestick reversal pattern before I'd be willing to get short on a longer term scale. And so I'm bullish up until that point. And we did get a couple of really good trades off of this level. This level has held pretty well. I still think that's our breakdown setup. If price comes in here, we get a breakdown, that's a decent entry. We may or may not get it. Now, the other thing that we looked at was a reversal at this little base drop on a confirmation short. We came really close to getting an entry yesterday and moved away. We've now gotten halfway into the level and we've started a little move away. So if you're in this short, I think it's okay to be in this one. In reality, if you're not in it as of yet, we are very sideways right now. It probably makes more sense to wait for price to break below 88.55 and get a reversal at 87.56. I think makes a little bit more sense of a trading idea. Gold, yesterday we talked about the breakout in gold happening, and we did get a little bit of a breakout. 6 candles later, we've gone basically nowhere. So if you're still in this gold trade, take your stop, move to break even. There's not a lot to really do with it. But if you took the trade, your stop should be at break even. You're still doing okay. You've just got your stop at break even because we haven't really done much since the breakout occurred. Aside from that, I mean, you might have another breakout above here, and this is really kind of what gold's doing. I don't know if anybody else has noticed this, but we keep getting a series of breakouts with small moves in gold. That's really what we're getting, and we're going to continue to get those until we reach a quality area of supply, and that would really be the next level in the next area. We looked at natural gas yesterday for a potential breakdown, so this breakout trade in nat gas was very effective. For those of you that took the nat gas breakout trade, you're still in it. At this point, I would take your stop, move it to break even. As we have started to continue to move down, but I would still stay in the position. I think you've got some time for it to run your way. I want to take a few minutes. We'll look at crypto, and then we're going to look at some individual stocks today. Starting with Bitcoin, we talked yesterday about Bitcoin breaking out of this triangle. We did get a breakout. If you missed the breakout, you did get a retest, and now we're continuing to run higher. If you still have doubts, then wait a little bit and look at taking this area here of old support acting as new resistance, which is where we're heading into right now on the daily chart, right? A little bit slightly larger time frame, but we are sitting right at a resistance point in Bitcoin. And then Ether, we did come into the potential breakout trade. Unfortunately, we gapped above it. No basing really for that level. But if you took it anyway, 1, 2, 3, 4, 5, 6 candles later, we had gone nowhere, telling you to get out. We had another gap up there in the overnight. And remember, this does not have the same volume that a lot of the other things that we trade have. And so you do see a bit more gapping in your trades. So be aware of that. All right, I want to take a real quick look at our FAANG stocks. Although the Facebook looks like it needs to be replaced out of the FAANG for right now. But Apple is sitting below a potential breakout trade here at 177.53. That's a level that we had looked at in the past and said that, if we come back into this region, look for a potential bit of basing before a breakout. And Apple's actually very well poised for a breakout. We dropped all the way down into this wick over wick area of demand and have gotten a nice little move away from that area. And that's really what has helped some of the bottom in our technology stocks. And so look for a breakout above 177.53. If I look at the implied volatility of Apple, we are actually at a pretty low implied volatility range. So if you wanted to just go in and buy a call, I'd be okay with that. Make it the simplest trade you can do. If you are a lot more aggressive, maybe you want to do a call ratio back spread. As the volatility continues to fall, call ratio spreads are really good in low volatility, although not as powerful as put ratio spreads, but still a very useful trade idea. Facebook, timber, right? If you look at what Facebook has done since its high earlier this year, we've dropped about 40%. We're down about 40% from the high in Facebook at its lowest point, which was yesterday or 2 days ago. We were dropped 44% off the high. So Facebook has melted the faces off of people. And so the question is, are we going to get a rally back up to this 248 and then see price fall again? A lot of people are saying, well, where do I get long? Isn't this a good time to buy? No, it's not. There's no reason to try to jump in front of a freaking moving train. Why don't you wait until we see a confirmed move back up in the bullish direction and then look for your opportunity to buy? Microsoft is also showing a bit of weakness relative to Apple and relative to the market in general, still well below some of the swing highs. We do have a supply area sitting up here in Microsoft that is a pretty clean area of supply. We came close to it once without getting in, so I will make this a confirmation entry. But I do think that Microsoft is showing us some signs of weakness. Amazon also rallied hard off of a demand area. Now, that demand area was one we had looked at in the past. And you got to go all the way back here to find that demand area, right? Well, inside of that demand area, we had this weird gapping, right? We gapped all the way down to here on an earnings day and then gapped all the way back up the next day. And so now we're sitting right at a spot where we've got a wick over wick area of supply in a stock that has a fair amount of weakness overall on the daily chart. So I think this one's actually poised. Let me throw my study set up here. We saw a big sell-off in volatility, so our volatility not quite as low as it could be, but understand that if we do continue to drop, I think you're going to see volatility rise back up. So I would be very interested in seeing what does a bearish play in Amazon look like. What does a bearish play in Amazon look like coming off of this supply level? I don't know that I would just get short immediately when we trade into this level, but I do believe that if I get a lower low and a reversal candle on the daily chart, then I can have a swing trade coming back down out of here. Google actually gapped way up on earnings, had a really good earnings announcement, gapped us way up. We've pulled now back down and filled the gap and have started to trade back higher. It looks like this morning we're going to open right about where we closed yesterday. Google, I think out of all these, is the one that I have the least amount of really strong feelings about one way or the other. And so I'm going to just not set anything up right now on Google. You could get a breakout above the all-time high. You could get a reversal and have price come back down. All in all, we're just fairly sideways. And then last is Netflix. And Netflix really took it on the chin, losing subscribers for the first time, I think, just about ever. And what's funny is that, I don't consider myself everybody else. I'm not a microcosm of the world. But, the Netflix original programming just doesn't interest me. And so the question is, how many people are like myself that it just doesn't interest me? And so I canceled Netflix because I decided that Disney Plus was better or HBO Max was better. And so now I think in these streaming wars, if you will, you're seeing so many new competitors that now Netflix no longer being the big dog on the block, still the big dog on the block, but not necessarily owning a monopoly, let's put it that way, has dropped 50%, right? Netflix is essentially down 50% from their November highs. The stock is really, really taking it on the chin. And so any rally back up to this gap fill area, I think, is a really strong opportunity to get short if we make it back to there. I don't know that we're going to, frankly, at this point. Another one I want to look at, because it's kind of been the new one that's replaced a lot of these, is Tesla, although Tesla's also taken a heck of a hit down. I think is setting up for a potential breakout. You could get a decent breakout in Tesla above this region here. We are, kind of hitting this 950 mark. We break above 950, you could see a little bit of a move higher in Tesla as this continues to go from here. But ultimately, I think what we may be seeing is a little bit of a roll away from these being our main stocks driving the market, because the market's showing some strength and we've gone back up over the last few days, but these are not the ones that are driving us. And so what's that next stock rotation that we're heading into? I think it's a pretty pivotal time as we're seeing higher inflation numbers. Are we seeing a little bit of a sector rotation rollover? Just something to think about and consider. So that's all I have for today. I know I went a little longer today than usual, but I wanted to spend some time taking a look at some individual stocks. If you guys have any questions, please feel free to send me an email, support@tradersarmy.com. Till tomorrow, everybody, I'll talk to you soon. See ya.
Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.